Welcome to Tesla Daily News Podcast. It's April 16th, 2026. Today, we're tracking the stock moving mix, a big software update, a rebound in shares, fresh delivery and production numbers, and the fast-moving robotaxi and robotics narratives that are doing a lot of heavy lifting for Tesla's valuation. Let's get into the 6 Tesla stories that matter most for investors today. Story 1. Tesla stock pops as the market pivots back to the autonomy narrative. Here's the hook. Tesla shares staged a sharp rally, and the story investors are buying is still autonomy, robotaxis, and AI, not near-term auto volume. Context. Tesla's stock has been volatile this year, and with deliveries slowing, the market is more sensitive than ever to any signal that full self-driving, cybercab, and AI compute are moving from someday to schedule. Details. Multiple market reports highlighted Tesla trading up strongly in the session, with some coverage noting moves in the mid to high single digits. At the same time, the broader tape was risk-on again as investors weighed Middle East headlines and earnings season. Tesla was called out among the leading Magnificent Seven gainers on the day. Impact. A rally like this matters because Tesla's multiple is primarily a narrative multiple. When the market is confident the autonomy roadmap is progressing, the stock can re-rate quickly. When confidence cracks on safety headlines, regulatory delays, or demand softness, the downside can be equally fast. Takeaway. In the near term, sentiment around FSD and Robotaxi timelines remains the primary swing factor for Tesla, more so than quarter-to-quarter unit sales. Story 2. First quarter deliveries miss expectations, production runs ahead, and inventory builds. Hook. Tesla delivered fewer vehicles than Wall Street expected, even as production stayed higher, and that gap is the demand signal investors can't ignore. Context. Deliveries are Tesla's most visible growth indicator. When deliveries lag production, it usually means one of 3 things: soft demand, logistics timing, or intentional inventory build ahead of a product or geography shift. Details. Tesla reported first quarter deliveries of 358,023 vehicles, below expectations in the roughly 365,000 to 370,000 range. Production was 408,386 vehicles, implying an inventory build of just over 50,000 units. Model 3 and Model Y accounted for 341,893 deliveries. Other models, including Cybertruck, totaled 16,130 deliveries. Impact. That inventory build raises questions about pricing and incentives going into the next quarter. If Tesla leans on price cuts to clear inventory, gross margins can compress. If Tesla holds pricing and inventory keeps rising, analysts will worry demand is rolling over. Takeaway. Watch for management commentary on demand elasticity, regional order trends, and whether Tesla expects the production delivery gap to normalize in the second quarter. Story 3. Energy storage keeps putting up serious numbers. Hook. While the auto side is choppy, Tesla Energy continues to look like the most consistent growth engine in the story. Context. Investors often treat Tesla as a car company plus options on software and AI. But energy storage is increasingly a fundamentals anchor because it can grow even when auto demand is cyclical. Details. Tesla's first quarter energy storage deployments were 8.8 gigawatt-hours. Impact. Storage growth can support revenue diversification and improve the quality of earnings over time, especially if Tesla can scale megapack volume while maintaining margins. It also strengthens the case that Tesla is building a broader energy and infrastructure platform, not just an automaker. Takeaway. If you're modeling Tesla's next 2 years, don't treat energy as a side business. It's becoming the stabilizer in the narrative. Story 4. Spring Update 2026, Tesla leans harder into subscription conversion. Hook. Tesla's latest software drop isn't just features, it's a revenue strategy. Context. Subscriptions are attractive because they scale without building more cars. And for Tesla, full self-driving monthly attach is one of the cleanest ways to expand gross profit per vehicle over time. Details. Tesla released the Spring Update 2026 with more than a dozen features across autonomy, AI assistant capabilities, safety, and convenience. A key item is a new autonomous driving app experience for vehicles with AI-4 hardware, making it easier to subscribe to full self-driving in one tap for $99.99 per month. The update also adds Hey Grok voice activation for Tesla's in-car AI assistant, plus location-based reminders. On safety, blind spot warnings now integrate into cabin ambient lighting, and the front camera can record up to 24 hours continuously. One long-requested convenience feature also arrived, the option to install software updates automatically overnight. Impact. The one-tap subscription flow is about reducing friction and increasing conversion. The more Tesla can turn its installed base into recurring software revenue, the more investors will justify a higher valuation multiple, but only if the feature set is compelling and regulators don't push back. Takeaway: software is still Tesla's margin lever. The question for investors is whether these updates translate into higher paid adoption, not just happier owners. Story 5. FSD safety headlines return, and they are a valuation risk. Hook. A viral incident involving full self-driving at a railroad crossing is exactly the kind of headline that can reintroduce regulatory and liability overhang. Context: Tesla's autonomy bull case requires trust from regulators, insurers, and the public. Safety incidents undermine that trust and can slow down approvals for unsupervised operation. Details: a report described a Tesla with full self-driving engaged accelerating through a lowered railroad gate, narrowly avoiding an oncoming train. The driver said he had tens of thousands of self-driving miles and called it his first major failure. Tesla's messaging continues to emphasize driver supervision. Impact: even if rare, these incidents can drive investigations, create political pressure, and impact the timeline to unsupervised operation, which is the core assumption behind robotaxi economics. In a stock where a large portion of value is attributed to autonomy, perceived safety setbacks can hit analyst sentiment quickly. Takeaway: for traders, these stories can move the stock day to day. For long-term investors, the key is whether incident frequency trends down and whether Tesla can demonstrate measurable safety improvements with supervised operation. Story 6. Cybercab and the Robotaxi race. Tesla versus Waymo, with regulation as the bottleneck. Hook. Robotaxis are no longer theoretical, competitors are expanding real-world testing, and Tesla needs to show operational credibility. Context: the robotaxi market is shaping up as a winner-take-most platform business. But deployment depends on regulatory approval and consistent performance, not just demos. Details: one report highlighted Waymo moving to more autonomous operation in London testing, with a path toward fully autonomous passenger services pending approval. Separately, coverage around Tesla emphasized growing cybercab activity at Giga Texas and the belief among bulls that robotaxi could be a major high-margin platform if unsupervised FSD becomes real at scale. Impact: the competitive set matters for Tesla's valuation. If Waymo keeps expanding city by city with regulatory approvals, it sets a benchmark for what real robotaxi looks like. Tesla's upside is potentially larger because of its installed base and manufacturing scale, but Tesla's risk is higher if regulators demand a higher bar after safety controversies. Takeaway: watch for tangible milestones, city-level permissions, supervised to unsupervised transition criteria, and evidence that the economics work beyond pilot programs. Alright, quick closing. Today's themes were clear. Tesla's stock is trading on autonomy momentum, but the fundamentals signal pressure. First quarter deliveries came in at 358,023 versus production of 408,386, while energy storage was a bright spot at 8.8 gigawatt-hours. We also got a major spring update geared toward boosting full self-driving subscriptions at $99.99 a month, but autonomy safety headlines remain a real risk. For tomorrow, keep an eye on how analysts frame Tesla into next week's earnings on April 22nd, especially margins, free cash flow, and any concrete cybercab and full self-driving timelines. If you found this helpful, subscribe to Tesla Daily News Podcast and follow us for your daily, investor-focused rundown of the stories that move Tesla.